gold and silver preserve purchasing power over long periods of time. And we need to go back to gold and silver currency once again, using this purchasing power we earn and go back and have it conveyed in the marketplace with gold and silver as is required in the Constitution.
Welcome to Gold Silver Pros, where you'll learn the ins and outs of the gold and silver markets. Searching for the best precious metals deal? Our affiliates are of the utmost trust, quality, and highest customer service in the industry. Shop with our trusted partner, 𝙎𝙊𝙇𝙍. Access special deals on silver, gold, and platinum through our website or call 307-264-9441.
Hey everybody, this is Rob Kientz with GoldSilverPros.com, and I have a really super special first-time guest on the program, somebody that I have followed for a very, very long time and was one of the ones that really influenced me on economics and gold and silver in my early days back in 2009 when I was learning about all this stuff. I have with me James Turk, who is the founder of Gold Money and someone that has banking experience, a deep-rooted experience in economics and money. Welcome, James, to the program.
Thanks. It's great to be with you, Rob.
So, you know, James, over the years, I've watched you so many times, and it's a pleasure to meet you, even though we're having to do it virtually. But I've watched you so many times over the years in interviews and read a lot of your work. And a lot of what you do resonates with me because you get down really to the basics of what money really is. And that's kind of where I wanted to start off. Just a simple question for the audience. What's the difference between money and currency?
Yeah, that is an important difference. You know, money comes into existence the same way that all goods and services come into existence. It comes through, time, hard work, the labor that you put into it, and capital, sometimes financial capital, but always intellectual capital. Currency is different. Currency comes in through accounting. It's a paper representation or a bank deposit representing money. So the currencies are a money substitute. But the key thing that we have to keep in mind is that both money and currency convey purchasing power. And there are two types of purchasing power. There's earned purchasing power, where we go out and create something of wealth or provide a service that's useful. And then there's phantom purchasing power. And that's what banks do. They create purchasing power out of thin air. And here's the rub. That purchasing power, when it's conveyed in the marketplace, we don't differentiate between it. Earned purchasing power and phantom purchasing power is considered to be the same thing, but in fact, they're not, because they come into existence in entirely different ways. And because they come into existence through accounting, they can be conjured up to any amount by banks and through their bank accounting. And that puts us who earn purchasing power at a disadvantage. And we see it through, for example, inflation.
Yeah, and isn't inflation, James, essentially stealing people's labor, because we trade our labor for currency now, not gold? Most people in the United States, around the world, unfortunately, do not save in gold or even in silver. Isn't it effectively the central banks and the government robbing us of our labor?
Yes, they're robbing us of our labor, and even more worse, if you want to put it this way, they're robbing us of our time, which is our most precious thing on earth.
Mm-hmm. That's right, because time can't be replaced. I mean, you could always go earn another dollar, but once that minute has passed, you never get that minute back.
You never get it back.
So there's a chart that you've talked about quite a bit that I think is a great illustration of the value of gold over time that I wanted to share, and it's related to crude oil prices. So you have here the British pound, the US dollar, two fiat currencies, the euro compared with gold. Can you walk us through the significance of this chart?
Yeah, this is a base 100 analysis. In other words, I've assumed that a barrel of crude oil, in this case, West Texas Intermediate, cost $100 or 100 units of these four different currencies back in 1950. And then month to month, I traced the purchasing power of these four different currencies, three currencies and gold, or if you want to call gold a currency as well, to the present. And you can see that an ounce of gold or a gram of gold buys basically the same amount of crude oil as it did in 1950. But the British pound, the euro, and the US dollar, and this is true for all national currencies, buy much, much less crude oil than they did back, 70 years ago. Now, why does gold do this? That's really the key question. Why does gold preserve purchasing power over time like this? It's natural money, and it has all the features of natural money. it grows, this accumulated above ground stock of gold that exists, grows about the same rate as world population growth and new wealth creation. So you have this consistency over long periods of time. And it's not just with crude oil, it's with other things as well. There have been analyses that show, going back to Roman times, how a loaf of bread, a bushel of wheat, all these things cost approximately the same. The interesting thing is that technology improves, so we're feeding a larger population, but the price of these things in gold and silver terms too, I should add, because the relationship between gold and silver is fairly consistent, although you do get some volatility in the ratio between the two. Gold and silver preserve purchasing power over long periods of time. And we need to go back to gold and silver currency once again, using this purchasing power we earn and go back and have it conveyed in the marketplace with gold and silver, as is required in the Constitution. Article 1, Section 8 says that the federal government has the power to coin money. It doesn't say that it can print money and regulate the value thereof. And that's misunderstood these days. Regulate the value thereof means that gold and silver have a ratio in relation to one another. And in order to be always coining enough gold and enough silver, you have to have that ratio adjusted to market rates. So the government had the power to adjust the gold-silver ratio in a bimetallic system to make sure there was always sufficient metal on hand for coining. Because if you didn't have one metal or the other, or if one metal was undervalued, it would get exported. You wouldn't be able to coin it, and that would disrupt commerce. And as evidence that that's the way it was interpreted, in 1837, they adjusted the ratio from 16.7 ounces of silver to 1 ounce of gold to the more famous 16-to-1 ratio of silver ounces to 1 ounce of gold. So we have to go back to the roots of the Constitution, understand money as the framers understood it, understand money as a natural gift. Nature provides everything humanity needs to advance, including money.
Yeah, it's correct. And a lot of times I think we as humans, a little bit of our hubris is that we can invent things that nature hasn't already provided us. I think, in my 47 years on this earth, I've learned that the world provides what you need, and we don't necessarily need to make it more complicated than it is. And I think, once we had, back in the 1800s, when the central bank started popping up in the 1913, when we got the Fed, it seems as though the monetary scientists, felt as though they could do better. And I know that you've quoted Milton Friedman before, and I would characterize him probably more as of a monetarist. He's definitely not a constitutional gold and silver person, I wouldn't think. But you've mentioned that even him as a monetarist, realize that what you need in money is an equal growth in the amount of money as the population, and that's a natural regulatory function that gold has served over 5,000 years.
Yeah, and that's an important point, and it's a factor of two things. First of all, gold is only mined when it's profitable to do so, whereas central banks can create any amount of phantom purchasing power by just running the printing press or putting accounting units in the government's checking account. And the second thing, which is also a function of nature, gold is dispersed in the Earth's crust, so it's harder to find and harder to mine. But the technology enables us to continue to accumulate this above ground stock of gold by about 1 3/4% per annum, year after year after year, which again is approximately equal to population growth and new wealth creation. So you have the supply and demand fitting perfectly Milton Friedman's monetarist theories. But governments refuse to acknowledge this. Central banks refuse to acknowledge this, so they propagandize that they are going to control inflation. But look what gold has done on that crude oil chart. It controls inflation beautifully. There wouldn't be an inflation problem if we were still using constitutional money.
That's exactly right. And back when I was researching my book in 2009, I came across, when I charted gold out over really long periods of time, I noticed that with people that held gold benefited because the gold became more valuable over time as a measure of technology increasing our output, but also as a natural measure against too much monetary expansion. And then as soon as we began getting into wars, and that required the need for us to create another currency to print, that all went away. And we're, I think now we're starting to have much higher bouts of inflation than anybody probably expected. I think the Fed has acted, though they're surprised. What is your thought on, if we go back to gold, the question I get all the time, is there enough gold in the world? People are used to all these fiat monetary units. Is there enough gold in the world? If we just switch back over, would gold still, James, serve that purpose as a way for people to save and to benefit over time from a little bit of natural deflation in prices and the ability of gold to hold its value?
Yeah, there is enough gold in the world. I mean, that crude oil chart going back 70 years wouldn't reveal that outcome if there was not sufficient amount of gold in the world. You know, remember that we have physical goods and services, and we have gold. Gold is a sterile asset. It's not an investment because it doesn't generate cash flow. It's money. And it sits in its above ground stock, you know, either coins in our pocket or bullion bars in a bank, or not a bank deposit because that's not safe. Bullion bars in a, you know, a private professional vaulting company, or, you know, silver coins, however it happens to be. And that's what money is. Money is this communications media that we use for, or medium that we use for interacting with one another when we're dealing in the marketplace. So that, but you know, what's happened here, Rob, is that central banks and governments have been able to take away this understanding that people had up until the 20th century, and tried convincing people that the currency that we now use is money, when in fact it's not. It's just a money substitute circulating in place of money. We have to go back to money, not only for some of the things that you were alluding to, but also like environmental issues. When you create this phantom purchasing power, it makes us think, it tricks the mind to thinking that we're wealthier than we really are. So we go out and, you know, destroy some forest, thinking that we can build some big McMansion there, because it's just phantom purchasing power, not real purchasing power. So a lot of the environmental destruction has come from central banks and the banking system by creating phantom purchasing power out of thin air. But as I mentioned in my book, the real issue is money and is tied to liberty. In order to control your government, as the framers of the Constitution understood, you had to have two things: free and fair elections and natural money. If you allow the government to and the banking system to create artificial purchasing power, you're at a disadvantage, because that gives the government the purchasing power it needs to do to wage wars, or to, you know, establish a domestic police force to, you know, interferes with your liberty.
That's exactly correct. And I'm glad you mentioned your book. I'm going to put a screenshot of it up on the screen. People can get this on Amazon. One of the tales that you talk about is, you know, when you're younger, $2 silver would get you a tank of gas. But if you use 2 fiat dollars today, I mean, what does it get you in LA out here? It doesn't even get you a third of a gallon of gas anymore. So, you know, the fiat dollar certainly hasn't held its value over time, like, you know, the silver and gold that we've used in our coins. And it's great that you have been in both systems, because you can relate an actual tale, a real life, you know, tale of how that works, which I think, James, the current generations miss. They don't understand. They've grown up on the fiat dollar. So yeah. What's the best way to educate younger people on, you know, the value of commodity-based money versus, you know, the system that we have now?
Well, they're going to learn it from real life experience as inflation gets worse. And, you know, all they have to do is look at how gold is maintained and preserved its purchasing power. So it really comes down to education. You know, we need to educate people so they understand. Either they're going to take that initiative to educate themselves by going to the internet and looking at, you know, your videos and a lot of other good educational videos that are out there about gold and silver, or pick up books or whatever it takes. But we have to go back to this basic understanding of what natural money is. There's just too much currency, you know, circulating, which relates to the chart that we were discussing earlier about velocity. You know, this is one of the most misunderstood concepts out there today in terms of economics. You know, people think that there's a velocity to currency, but velocity is a tautology. There's no sense in this formula that they use. What this chart of velocity shows is that there's too much currency being created, and therefore velocity is actually declining. So if you look back at the 1990s, it's fairly consistent, the level of velocity in this particular chart. It then rose a little bit, but it's been declining ever since as the money supply has been increasing. So the answer to why is the velocity declining? It's declining because the central bank is printing too much currency, the banking system is creating too much deposit currency. And as a consequence, we have inflation as a consequence.
Yeah, and it's interesting that the monetarists and Keynesians and now the MMTers, which is just another name for the same thing, in my opinion, will tell you that you need high velocity of money to have inflation. And yet we saw that chart, velocity of money have been falling basically since 2000, but now we're having higher CPI. You know, people will catch on to that eventually. I'm afraid that they won't catch on to it, James, until it's a little bit, you know, too late, until the inflation's gotten so pervasive that it just can't be ignored anymore.
Yeah.
In your opinion, as we look at the pressure that's coming on the dollar and all the rest of the currencies, euro has completely crashed lately. How much time do people have, you know, in your study of currencies? Are we nearing the end of this fiat monetary system? Can it keep going for a while, or kind of where are we in this process?
Yeah, you know, I've thought that the system would have collapsed long before now. You know, I wrote my first book, The Coming Collapse of the Dollar, in 2004. 2008, you know, I thought maybe that was going to be it, but they managed to keep the system going further and further. But as they do it, there is increasing regimentation by the government. There are more controls, less freedom to act, less to do with our wealth, our hard-earned purchasing power, as we want to do it. And that's not the role of government. The role of government is to protect our natural rights, our inalienable rights. And these are being eroded as the currency system is being debased. So I'm hopeful that we'll be able to go back on the right road and return to a monetary system like the framers of the Constitution had implemented. But I don't know. We'll just have to see how it unfolds. You know, when you have a monetary turmoil, you can go the right way, like the framers did after the Continental collapse, which was the first currency of this country. One of the reasons why they created a more perfect union was to put the monetary provisions in the Constitution, and it worked well enough, you know, for 170 years until it was abandoned, you know, notwithstanding the fraud of fractional reserve banking. Or you can go the wrong way, like in Germany after the 1920s hyperinflationary collapse. You know, they went the wrong way. I can't predict how it's going to happen. We just don't know. We can't predict the future. But, you know, we have to be aware that it may not turn out to be the way we want it to turn out. We may not go the right road. You know, Germany was one of the better educated countries in the 1920s, one of the better educated countries throughout the world, one of the wealthier countries, even though they had lost the World War. And look how they ended up. So, you know, I hope we don't have that societal turmoil that's possible. I hope we go take a reasoned approach going forward. And the core element to understand is we have to return to a monetary system based on natural money, gold and silver.
James, I've appreciated, you know, all the education I received from you and other, you know, people throughout the gold community. That I came to gold in 2009. I got laid off from Ernst & Young during the height of the financial crisis, February 2009. My son was 3 months old. He's my second. And I was faced as a breadwinner in my family going, why did I just get laid off? I was, you know, had the college degree, working at a Big Four professional accounting organization. You know, what happened? And I began on that journey. You were certainly one of those. And I think part of your legacy, James, will be as an educator, but it'll also be as somebody that provided a solution. So you founded Gold Money back in 2001, I believe. And it's a great way for people to participate if they're interested in gold. Can you speak a little bit about that process of Gold Money and what your thought was there and why you created it?
Yeah, it gets down to when you buy gold and silver, you know, how do you store it? And there are basically two ways. You can buy it and store it yourself, or you can buy it and store it professionally. And there wasn't really at the retail level an option to store it professionally. I mean, if you had millions of dollars, you could arrange an account with a Brinks or, you know, one of the storage companies and open an account with them. But the retail investor couldn't do that. So I created Gold Money with an idea that, well, you know, the retail market needs a way to diversify the storage of metal, because again, the future is uncertain. One of the ways to mitigate the risks of an uncertain future is diversify whenever you can. So I thought to myself, this is back in the late 1990s, although the idea for Gold Money goes back even before that. How do I create it? How do I get people to send a wire transfer to a website? You know, this is before e-commerce was accepted as a form of commercial activity.
Mhm.
And I basically said to myself, well, if I create a system that I would be willing to send a wire transfer to a website, I could convince other people based on the concepts of diversifying and holding gold and silver in different vaults in different countries around the world, that they may also find it attractive as a way to diversify their precious metal holdings. And it worked. So we now have over $2 billion of customer assets that we safeguard in a variety of different vaults around the world. And the key elements to it is that we have it audited by third parties, and it's insured, and people have access to those audits and the insurance certificates. So it provides the assurances of integrity that their gold and silver is really safe. And by choosing different vaults, if you want to choose different vaults around the world, you have the opportunity to diversify in different geographic areas, different political risk. So what it comes down to at the end of the day, Rob, is diversification. I recommend some people own gold and silver where they live, but I also recommend that you diversify, have some wealth outside of the country where you live, so that if you don't like the situation where you are, you can always go and live temporarily or longer at some other location and still live comfortably with you and your family. It goes back to a concept I learned when I was in banking back in the 1970s and living in Southeast Asia. I was working in Thailand at the time for a big New York City bank, and we developed what was called a last plane account. And what we would say to Thai individuals who did not know whether the Red Chinese were going to come across the border, because this is during a time that the Vietnam War was going on, that with a last plane account, you could go with your family out of the country and live comfortably and return to your home country once sanity prevailed and you could reopen your factory and live the life that you wanted to live. Back then, I didn't think it was necessary, for a lot of the Western countries to have people living in those countries to have a last plane account. But given the increasing government control and the path that we're on, I think everybody should be thinking in terms of a last plane account.
Yeah, I agree with you. And I have a little bit of a story to share with you about the Vietnam War, if you don't mind.
Sure.
Mac's wife is my high school sweetheart. We were together for 29 years. She lived in Cambodia. She's Cambodian, and they went through that entire situation. She, like me, was born in 1974. Her family had to escape not only the Viet Cong, but the Khmer Rouge, which were murdering all of the educated people. Her parents happened to be teachers in Cambodia, and that made them targets because communists don't like educated people, people that can think for themselves and criticize their policies. In any case, the story that her mother tells me is the way that they got out and eventually escaped the concentration camps and got across the border was she had a little bit of gold jewelry she was able to hide, and she bribed, the border guards to get out with the gold. And that's what eventually secured their freedom. And she said, nothing else I had would have, and we would have died in that concentration camp if we hadn't. So gold was a way to carry a lot of value in a compact way to buy their freedom. So when you link gold and freedom, I wanted to tell that story because it's an actual story of how gold secured the freedom, of my wife. And I never would have met her, had her parents not had a little bit of gold and been able to secure that. And it over time, that's what gold does. It carries value and people recognize that.
Exactly. And we also have to recognize that it's an uncertain future, and you have to prepare for all eventualities because we just don't know how things are going to unfold.
Yeah, I agree with you. The last question I had for you, and the last topic that I wanted to talk about, the number one question that people ask me when we're getting into gold, silver is, I don't necessarily want to store it in my home, maybe a little bit, but I want to look for a secure and safe location. Of course, people on my channel know about Daniel and I's work on the Perth Mint and the challenges that they had in terms of actually having the gold and silver they said they have for their customer accounts. When people are looking at someone such as, Goldman or all these other providers in storing their gold, what should they be looking for, James, in order to get comfort that what they're storing is going to be safe and secure and available when they need it?
I think the rule of thumb is a common sense rule that there's no free lunch in this world. The Perth Mint, for example, says that you can store in their certificate account and not have to pay a storage fee. Well, you now have counterparty risk, and you have to judge whether that risk is real or not. with gold money, for example, you don't have counterparty risk because that customer gold is not on our balance sheet, but you have performance risk. The performance risk that the audits are completed, that the insurance certificate is there, and we provide that information so people can see that this third-party verification is there. So just apply some common sense to whatever your decisions are. If you want to store gold, the first decision, or excuse me, if you want to buy gold, the first decision is you have to ask yourself, why are you buying it? Are you buying it as a method of having some security to get across the valley, regardless what may come? Or are you buying it to trade to try to, make a profit from fluctuations in price up and down? That second category I leave to the professionals, commodity traders, the guys on Wall Street, et cetera. Don't try to trade gold, just accumulate it. It's a form of savings. And look what's happened over the last 100 years since the Federal Reserve was created. The dollar's gone from $20.67 to ounce of gold to 1750 or wherever it is today per ounce of gold. And that trend is going to continue. It's a long-term trend of currency debasement, courtesy of the government and the Federal Reserve.
James, I want to thank you for being on the program. It is an absolute pleasure. I feel like I'm interviewing an icon of mine, so a little bit starstruck, but it's just because of all the work that you've done over years, and I do greatly appreciate it. You along with David Morgan and Alistair and lots of other people, were very influential to me on my journey in learning this. And of course, it's something I'm teaching my children, and hopefully through our channel, we're educating new generations as to the wisdom of the commodities and the founding fathers in gold and silver. Last question for you. How do people, if they want to reach out to you or they're interested in learning a little bit more about gold money or your writings, how do they reach out to you?
Yeah, 𝙂𝙊𝙇𝙀𝙍 is our website. And I also am fairly frequent on Twitter, making information available there. So my Twitter handle is @FGMR, and Free Gold Money Report, FGMR.com, is where I have a number of articles which some of your viewers may find interesting, particularly recent ones about natural money and the theory of natural money.
Yeah, and your book, Money and Liberty and the Pursuit of Happiness, the Theory of Natural Money, which you can get on Amazon. Highly recommend people read that. I'm in the middle of it right now. It's a fascinating book. And James, I love books because they're tactile. You can carry them with you, and they're full of a ton of information. I know that makes me very old school in today's world, but I appreciate that you put that book out there and shared that information with people.
I wanted to share it with my children and my grandchildren and everybody else who's interested in learning from my educational experience, which is very varied over more than 50 years of a business career globally. Because I've lived in 7 countries, I've traveled to more than 50. I've been in banking, investments, commodity trading, you name it. Founded my own company. So there's a lot of information in that book that people might find useful.
Thank you so much, James, for all your contributions over the years. And thank you again for coming on the program. It's been an absolute pleasure, and I appreciate having you on.
It's been my pleasure too. Thank you very much.